Welcome to the Stage Analysis midweek video. It's Wednesday the 18th of January 2023. I'm going to do a special feature for this midweek video on the IPO stocks, covering some of the stocks that have come out during the last 2 or 3 years or so that are now starting to potentially develop stage 1 bases or might be already breaking out into early stage 2. There was quite a few stocks that have obviously listed over the last 2 or 3 years, but I've filtered them down to obviously using certain criteria, and then I've gone through manually and just picked out some of the ones that are now starting to develop in stage 1, might be near the latter part of stage 1 even in some cases, and some have already broken out into early stage 2, as with the market attempting to potentially move towards stage 2 type behavior. It's in stage 1 testing the stage 2 levels. It may not move out into stage 2, but if it does, and I still say a big if at the moment, it's not guaranteed that it will. Stage 1 doesn't guarantee that you're going to move into stage 2, but if it does, then the more speculative areas of the market will obviously get a bid again, and obviously the IPO market is one of those areas that tends to have obviously big moves once the market starts to move into a stage 2 advancing phase. So at the moment, as you can see from the IPO ETF, which is a reasonably good proxy of the IPO stocks. So in general, it basically has gone through the entire 4 stages over the course of the last 3 years. And at the moment, as you can see, we're still in what we call stage 4B minus. So the minus just means that it's potentially put in a low, but it's not yet ready to be called stage 1 here. It did start to show stage 1 type behavior. Got a change of behavior, change of character through here, got back up to the 30-week moving average, and then started to pull back down again. So we did start to see a basing structure develop across this range here. So again, so you had a selling climax, automatic rally, secondary test, and some upthrusting action, but then came back in again. We had a spring type action at the bottom here, but then couldn't manage to push back through into the phase D of the base structure, and has rolled over again and made a stage 4 continuation breakdown. However, it is attempting to come back into the range again here at the lows of the base structure. So although it's been weak into the end of last year, obviously compared to what individual stocks are doing, you can see underperforming the S&P 500 here. So this is what we call the Mansfield relative strength. So this blue line here is what's known as the zero line, which is a flattened line on the Mansfield relative strength indicator. But here I use it using the actual moving average that it references and the relative strength of the ETF here versus the S&P 500. You can see a slight bit of an uptick, but it's still underneath that now flattening zero line. So it's still underperforming, but you're starting to see a little bit of a turn here. But so in terms of base structures here, what I'm mentioning, a good example, this might be a good example to talk about the Wyckoff events in a base structure. So this is one of the Wyckoff accumulation schematics, with which there's 2. The second schematic doesn't have the spring in the test. It just has another last point of support, which is a higher low within the base structure. So this is kind of a generalized base structure from obviously that you see on multiple time frames. You can see this on any time frame that you look at. It's obviously not going to be exact to this, but you will see the same characteristics, what are known as the Wyckoff events, occurring most of the time in lots and lots of stocks. So once you start to know these events, it gives you a good way to divide up a base structure and give you clues to where a stock might be within that base structure. So you have the selling climax after initial preliminary support, automatic rally, secondary test area. So this makes up the phase A area when you just got what we call the stopping action. You got a change of behavior and then a potential change of character. Then we start to get an upthrust action, secondary test within phase B, potentially more upthrusting action. And then once you start to get to the spring and the test within phase C, once you start to get to the more actionable points of a base structure. So this is in the Wyckoff area, these are the action zones for the spring and the test and last points of support and the sign of strength rally up and out of the base. And this intertwines with Weinstein's method as the stage 2 breakout is the when we generally get that sign of strength rally out of the base structure, if it's obviously a big enough base structure. Within stage analysis, we also obviously have the moving averages, so the 30, the 40 week, etc. So if you've got the 30-week moving average coming down like so and starting to turn back up again, if you've got the stage 2 breakout attempt and you've got a now rising 30-week moving average at this point here, then this stage 1 structure is then moving out into early stage 2. So, and the majority of this structure low won't be called stage 1 until you start to get that first little tip above the 30-week moving average and start to move back down again. So at this point in here, we would consider that stage 1A, and then which is early stage 1, and then starts to move on into stage 2 up here. So this period before that, majority of the time, phase A and phase B, a lot of the time will still form when a stock is in stage 4 still, and you won't actually know that a stock is in stage 1 until you get these, again, this change of character move, the phase C and phase D events happening, and you start to move up and out towards the top of the base structure again. So stage 1 can often look quite small, but if you look back in the data and you look back across the structure, you can see that the vast majority of it has already formed while the stock was still making lower lows within stage 4. You can see here you've got a lower low, lower low, lower low within here, and then potentially lower highs as well, still developing while it's in sort of still stage 4 type area, and then starts to potentially, you now know that this full structure is becoming stage 1. So it's a little bit tricky at times to identify the changeover, but the Wyckoff events and the Wyckoff structure it helps you actually identify when a stock is moving from stage 4 to potential stage 1. So if we go back to the IPO chart again, you can see this structure. If I mark that out on here, that it's had, so there's the selling climax, your automatic rally, secondary test kind of area. We've got an up thrust action within here, and then it attempted to have a bit of spring type action down here and came back into the range, but as you can see, it couldn't rally on through, didn't make any move up towards into phase D, and then has rolled over, made a bit of a bear flag move there and started to break back down again with a continuation breakdown to new lows. But it has come back into the range again here. So this is what we call the move back above the 50-day moving average again. It's what we call stage 4B minus. So it's potentially attempting to bottom still. We've got this big, obviously, base structure that's been developing. The majority of the price action's been within this 26 to 33 range, but it is at the weaker end of this, and it may be bottoming, but it's not yet technically strong enough to be considered stage 1 here. If we do start to see some breaks above the near-term pivot highs, so in here, then potentially this would give us a change of behavior, and then we could consider this whole structure then moving into stage 1, and you could even move out into early stage 2 once you start to get back above this 200-day moving average in this kind of zone up here. But obviously not there yet, still a ways off, and as I said, still in stage 4B minus. So we need to see a big improvement in this. You need to see a move up and out of that 30-week moving average, start to come back on around, and the 30-week moving average starting to flatten and turn around. So at that point through here, you could potentially get a stage 2 breakout attempt at that point, which would still have obviously overhead resistance zones to deal with if it did. And obviously you'd want to see that relative strength breaking above the 0 line as well, at least at that point. So, but obviously this is a proxy for all of the IPO stocks, but doesn't cover obviously every IPO stock. I'm not sure how many are in the ETF. Might only be around, I think the last time I checked there was only about 50 or so, but that was a while ago. It might be different to then. That was a while back. So